The following is a presentation of TFNN.
Let's go to our first call of the day. We'll talk to John in Austin, Texas. How you doing today, John?
Way too good, Ken. Appreciate what you're doing. You do such a great job. This show is fantastic every day.
You're a good man, John. Really appreciate it. Thank you.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
How you doing, everybody? Welcome to another edition of Breakout Investing on TFNN, Wednesday, March 27th. Thanks very much for tuning in. 877-927-6648. That's the number to use to give me a call, talk about this market. Folks, did you know a great way to listen to all TFNN programming is on your smartphone? All you have to do is type in tfnn.mobi right in your smartphone browser, and you can listen to the stream 24/7. Tiger TV, also a cool feature on the homepage of tfnn.com. At Channel 1, the show is carried live. It is archived in Channel 13. Tiger TV, also viewable on your handheld device. Just open that smartphone browser, type in tfnn.com. Over on the right-hand side of the page, just click that box with those electronic devices in there. Click that box. It'll recognize what kind of phone you have and start streaming right on your phone. All right, taking a look at the NASDAQ Composite. Hits a low today of 32.27, but it is right back up near its high. Another resilient day for the tech index. Seeing a lot of large-cap tech names under pressure. We'll check on names like Google and Apple. They may have come back since the last time I checked because the NASDAQ Composite has rallied back. But right now it's up just a little more than 1 point to 32.53, but again, well off its session low. S&P 500 also well off its lows. It is down just about 1.5 points to 1562 after hitting an intraday low of 1552. And the Dow Jones Industrial Average down about 35 points to 14,525. It hit an intraday low of 14,439. Still some uncertainty in Europe that the market is grappling with here. Cyprus seems to be, sorting itself out, but there are, newfound concerns about this government they're trying to form in Italy. So Europe is back on the front burner. It is hard to believe that. Let's see, Friday is Good Friday, so I believe Thursday is going to be the last trading day of the month. I believe that is true. Yeah, the last trading day for March, really the end of the first quarter, will be tomorrow because the market is closed Friday for Good Friday. Bond yields really taking a hit today. The yield on the 10-year note recently at 1.85%. 1.85%. Let's take a look at that chart of the 10-year yield, and you'll see a break below the 50-day moving average last week, and then a big gap down for the 10-year yield. Again, trading sharply lower, 1.85%, and the 30-year looks very similar. It broke below its 50-day moving average last week, and it gapped down as well. Yield on the 30-year bond, 3.09%. Saw something on Twitter earlier today. What is up with money going into the bond market, pushing these yields lower? Is it concerns about slowing growth ahead for the economy? Even though the market is going to be closed on Friday, we are going to get the latest look personal income and spending for February on Friday. Incomes are supposed to be up 0.8%, spending up 0.6%. But is this destruction and heavy selling pressure in bond yields, or heavy buying in the bond market pushing yields lower, is this a result of in anticipation of slowing growth for the economy, or is it a flight to safety? And I think it's probably a combination of both, and maybe more towards the latter, because this flight to safety trade working in the bond market right now is also working in a lot of defensive stocks out there. Inside the Dow, names like Johnson & Johnson outperforming nicely. I mean, look at Johnson & Johnson after it broke out of a base back in late late 2012, early 2013, breaks out over 71. It's now at 81, has just been a straight shot up. So that's a Dow component performing very well. And then Procter & Gamble also holding gains nicely here. Big gap up for the stock back in January. I assume that's when it reported earnings, but Procter & Gamble doing very well. Typically, these are, slower moving stocks. Clorox, CLX, has been a monster performer since its breakout in January, over $76 a share. It's now at 87. And finally, General Mills, GIS, another defensive name out there, has been a monster performer as well. So you've got money flowing into the bond market. That has knocked yields considerably lower in a fairly short amount of time, and you've got money continuing to move into these defensive names. So some people may say that's not necessarily a good sign for the market. You do want to see an ample supply of growth stocks acting well, and that is going on. Names like LinkedIn are continuing to do well here. But the amount of defensive stocks flexing their muscle certainly needs to be paid attention to here. And a lot of them are very, very extended in price at this point. Volume today tracking slightly lower on the NASDAQ. Tuesday, we saw 1.4 billion shares trade on the NASDAQ. Very, very light. NASDAQ volume, average NASDAQ volume these days is around 1.7 billion shares. So on Tuesday, 1.4 billion, tracking pretty close to that level today, just a little bit lower, and volume on the New York Stock Exchange tracking higher than the 555 million shares we saw on Tuesday. Average volume on the New York Stock Exchange these days, 725 million shares. So volume very light yesterday. It is tracking 5 to 10% higher today. So if it ends that way, it remains to be seen if we're going to see a distribution day for the market. Distribution days are higher volume declines. We've had 4 in the S&P 500, 4 in the NASDAQ composite in recent weeks. So that tells you there's some mild distribution in this market. Probably reason enough to be defensive here. There are still stocks out there working, but there are also a lot of extended stocks out there. So when it comes to putting new money to work, it's not exactly easy to do that unless you want to chase stocks that have been running higher for several weeks already, and that is generally a risky strategy. Earlier today, Chicago Fed President Charles Evans said the Federal Reserve should not scale back the pace of its bond buying program anytime soon. Evans said he expects purchases of $85 billion each month of treasuries and mortgage-backed securities to continue through the end of the year, although circumstances might change. That will be dependent on what economic data look like in coming months. But so interesting comments, not surprising, from the Chicago Fed president. Mentioned some large cap tech names under pressure. Let's see if they're bouncing back along with the NASDAQ composite. eBay still underneath its 50-day moving average. It has really been hit hard since February or so, when it was trading around $57. Shares were last trading at $51.96, down 13 cents on the day, trading in the top half of its trading range after hitting a low of $50.95. Google has been under selling pressure for most of the day. It is trading near its session low, looks intent to pay a visit here to its 50-day moving average. Shares of Google last trading at $801.99, down 1.3% on the day. The 50-day moving average for Google is 786. So it is about 15 points from that 50-day moving average. If it gets down that far, will it find support? That is the main question at this point. Shares of Apple, AAPL, under some pressure. Apple closed above its 50-day moving average last week, and it was trying to hold above the 50-day line. It looked like a new uptrend was ready to start here, but Apple is down $8.15 today, back below its 50-day moving average, down 1.8% to $452.99. So that's a look at Apple. And finally, Priceline, which I believe is in the NASDAQ 100 as well. price line recently gives up its 50-day moving average. It has fought back, trading near its session high, but still down $1.73 to 692.86. So tough market out there, choppy market out there. Anytime European headlines are front and center, that is going to result in market choppiness. I published my last edition of Ultimate Growth Stocks yesterday and said overall it strikes me as a market where the risk is starting to outweigh the reward. Mainly I'm saying that because of the increasing number of distribution days, higher volume declines that we're seeing in the major averages. There's that. Plus, there's the fact that there's a lot of extended stocks out there. Very few stocks out there still within buying range. That is, potentially problematic. So it's just without an edge, I don't think it makes much sense to be too aggressive here, putting new money to work. Shares of Boeing. Remember Boeing yesterday up 1.8%. Successful test flight with a new battery system for the 787 Dreamliner. Well, reports today that the FAA quite possibly will limit the distance the 787 Dreamliner can fly even after a battery fix is accepted. So Boeing initially fell down to 85.05, but it has its losses are much less than that now. It's trading actually up near a session high, down 44 cents to 86.18. Boeing has been a tremendous performer after its breakout in January, over about $77 a share. So Boeing's been an outstanding performer. A couple of stocks down here today on news of secondary offerings. Dollar General, near its session low. Going into today, it was working on a 5-session winning streak. Recently saw pretty decent earnings from the dollar retailer. Shares today down 2.7% to 50.82. It is offering 30 million shares. And Francesca's, FRAN, another company that recently reported pretty decent earnings. Stock had been doing well, recently broke out over some resistance at 29.30, but it is taking a hit today, down 5.2% to 28.57. Another secondary here, but much smaller. Francesca is offering 7.4 million shares. So as you can see, Francesca is just holding above its 200-day moving average here. And that is that. Economic data today. Pending home sales for February down 0.4% sequentially in February, but up about 8.4% from a year ago. Remember, pending home sales, this is a sale that is, a sale listed as pending when the contract has been signed, but the transaction has not yet closed. Take a look at the ITB, iShares U.S. Home Construction ETF. It looks poised to extend its losing streak to 5 sessions here. It is trading near a session high after early weakness, down 3 cents to 23.95, but looks like a possible test of the 50-day moving average coming up for the ITB. 50-day line at 23.22. It's currently trading at 23.95. We'll be right back, folks.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pezzamento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure, 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
you take a hands-on approach to managing your investments. And whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
If things end the way they are right now, with the Dow only down about 0.2%, S&P 500 down about a point, NASDAQ Composite up 2 points. It's too early to say if we're going to get another higher volume decline today for the major averages. If we do, that would be the fifth for all of the major averages in recent weeks, which is potentially problematic. I mentioned before we went into break, this is a market where I think the risk is starting to outweigh the reward for individual investors out there. Yeah, you could go to flight to safety trades and, these names like General Mills, Clorox, Johnson & Johnson, but, all these names are extended in price. Growth, aggressive growth, kind of mixed performance. Visa continues to do well. Visa broke out earlier this week, and it looks, poised to extend its winning streak to 4 sessions today. It's up another 0.6% to 168.50. This is a later stage base. It's not ultra late stage. It's probably a third, fourth stage breakout at this point, but still good technical breakout for Visa and its competitor MasterCard. MasterCard, which recently went below its 50-day moving average, it has rebounded and is also trying to break out here, up another 0.6% today to 538.88. So there are some growth names working out there. LinkedIn continues to be an outstanding performer. LNKD. Let's see here. Did that take? Fine. There's LinkedIn. Yeah, LinkedIn, nice gap up here and early February, and it has been holding gains nicely. It's up 1.3% today to 178.33. But still, this is a market where it's hard to have an edge when there's underlying institutional selling in the market. It is it's just tough to have an edge out there. You always want to put money to work when the market tide is clearly flowing positive. It is flowing positive for now, but again, underlying distribution in the market, choppiness, making it difficult for new buys to make headway. 877-927-6648. Let's head out to Johnson City, Tennessee. Talk to Tim, who wants to talk BlackBerry. How you doing, Tim?
Hey, Ken. How are you doing?
Doing okay, thanks.
I've never called into your show. I've talked to Steve and Tom, and I wanted to... BlackBerry caught my eye. I guess, is it officially called Research in Motion now?
It is officially, it used to officially be called Research in Motion. Now it's officially called BlackBerry with the new ticker BBRY.
What caught my eye is, it's been going down, for many, many, many years. And just this volume off the bottom, if you look even at a monthly chart, I mean, just the high volume lows over the last 4 months tells me that the big money's stepping in and saying, okay, there's, we've sort of declared somewhat of a bottom here, but it's risky with earnings coming out in the morning. It may not depend on basically their earnings, but maybe their forward guidance. But I know they've come out with the new BlackBerry. I can't remember the name of it, and it's received a lot of
So the Z10, which does not have a keyboard, is the one that just came out. The Q10 has the keyboard, and that is actually probably going to be the big growth driver for the company. That does not come out for another couple of months. I think I have that right. But the Z10 is what was just made available in the U.S. A pretty sleek phone. But you're right. When you do look at a monthly chart of BlackBerry over the past 6-7 months, it has been a very strong move off the bottom, basically from $7-8 a share all the way up to 18, and it's pulled back a little bit. Obviously, the big risk here is they're saying you could see a 10%, 15% move either way for BlackBerry. For tomorrow, just depending. What the company says. The CEO, I think, is going to try to sound as optimistic as possible. He's definitely a glass half full guy. The phone is a nice phone, the Z10 and the Q10. They have about 2% share of the cell phone market right now. There's some saying they may ultimately be able to get 4 to 5%. So it's a tough call. I just say I can't condone a buy so close to earnings. I think this is one where you got to just wait and see what the company says. And if you get a nice move for the stock, it probably it'd probably be better just to wait and hear what the company says before taking a position ahead of earnings.
That's what I was thinking. I mean, just to buy it because you think the earnings might be. To me, it looks more like a possible long-term buy, just based on the chart.
Yeah, I mean it's not looking bad. It's definitely it's been under some accumulation, been under some selling pressure lately, but we'll have to see.
Okay, well, thanks a lot.
All right, Tim, appreciate the call.
Talk to you soon.
All right, folks, headed into break number 2. Thanks to Tim in Johnson City, Tennessee, talking BlackBerry. We'll be right back, folks.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Before we went into the last break, we were talking to Tim in Johnson City, Tennessee, about BlackBerry. They are scheduled to report earnings tomorrow before the open. And let's see here. I did have their the estimate is for a loss of 29 cents a share. Sales down 33% to 2.8 billion. Total smartphone shipments expected to be around 6.95 million, with BlackBerry 10 shipments expected to be around 1.1 million. So we'll have to see what BlackBerry has to say. It's probably going to be a volatile day of trading for the stock. Looking at the daily chart for BlackBerry, it has been a strong move off the bottom. We were talking about that before we went to break, and then even in December and into January, stock went all the way up to 18, and then from 18 in about a 1 to 2 week period in January, it went from 18 down to about 12, rallied back to 17, back down to 13, has been rallying back, and then some big sellers in the stock last week on Friday, and some sellers in the stock again on Monday. It's trying to rally back, but still underneath that 50-day moving average. So looking a little suspect ahead of earnings, but we'll see what the company has to say tomorrow. Let's see, economic data tomorrow. We've got weekly jobless claims. They are expected to be up slightly to 338,000 from 336,000 the prior week. The final estimate to fourth quarter gross domestic product expected to show growth of 0.3% from a prior estimate of 0.1%. The Chicago Purchasing Managers Index for March will also be out tomorrow. Look for a reading of 56.5, down slightly from 56.8 in February. April gold today added $10.50. I think it ended a modest losing streak. 3 sessions or so, but down 10.50, 0.7%, settles at $1,606.20 an ounce. And U.S. dollar, pretty significant upside move for the U.S. dollar index, up to 83.22, up 0.4% on the gain. Mentioned the bond yields continuing to get hit as money moves into the bond market, and 10-year note at 1.85%, 30-year bond 3.09%. May crude oil, 4-session winning streak going here. 96.58 a barrel is the official settle, up 24 cents or 0.3%. We did get some inventory data today. Crude stocks up 3.3 million barrels versus an expected gain of 1.6 million, so more than double expectations. Gasoline inventories down 1.6 million barrels. That was mostly in line. Distillate stockpiles, basically products made from crude oil, they fell 4.5 million barrels, much more than expected. Still keeping an eye on a couple of oil refiners here. Recent new issues, CVR Refining. CVRR is the ticker here. Company went public in January at $25 a share. Like how this one's holding on to gains. Still solid technical picture here. Stock is up 19 cents today to $34.69. And then another recent IPO in the refining space, PBF Energy, holding just above its 50-day moving average, has been under selling pressure for 3 straight sessions, down 3.3% today to 37.64. Let's see if it can firm up at the 50-day moving average right now at 36.83. Did get some earnings reports. Hard to believe, first quarter is going to end tomorrow. Second quarter starts April 1st, and then our earnings reports are going to, first quarter earnings reports going to start to roll in towards the middle of April, latter portion of April. Hard to believe. Fourth quarter earnings season just ended. We're about to pick back up with first quarter earnings season. But let's take a look at Mattress Firm. MFRM. Nice little move today for this stock. Up 12.8% to $35 a share. They made 30 cents a share, up 200% from a year ago, a little bit below the consensus estimate of 32 cents. Sales up 37% to $258.3 million. That was also below expectations. Same-store sales, not all that impressive, down 1.6% in the quarter. Earnings guidance for the current fiscal year mostly in line with expectations, but revenue guidance a bit soft. So all the headline numbers not looking all that great, but Mattress Firm outperforming nicely today, up 12.8% to 35. TPX, Tempur-Pedic, riding Mattress Firm, its coattails higher. Tempur-Pedic up 6.9% today to $50.05. And then the other main mattress player, Select Comfort. You've probably seen Select Comfort in the malls, up 6.6% today to $20.25. But Select Comfort certainly has been hit hard in recent months by a lot of selling. Interesting to watch Lindsay Corporation trade before the open today. This looked like a very, very nice quarter. The company makes irrigation systems used in the agricultural industry. Stock closed Tuesday at $92.37. In pre-market trading, it was trading around $95. That was because they beat bottom line and top line estimates handily. Earnings up 50% from a year ago to $1.50. That was 20 cents better than the consensus estimate. Sales up 33% to $175.5 million. That was more than $12 million above the consensus estimate. Backlog of unshipped orders at a record $159.3 million. Up 82% from a year ago, and up even more sequentially, up 87% sequentially. But look at the stock. I mean, down 3.8% to 88.89, kind of a wild day of trading. Lindsay had been setting up nicely. It really looked like a breakout from a cup with handle base was taking shape here. But again, choppy, volatile market where you just don't feel like you have an edge right now. Not really all that surprised to see wild price action like this in a market that really could go either direction here. So Lindsay, big sellers in Lindsay today. It's trading off its low, but still in the bottom half of its range today. Coming up after the close today, let's check in on X1. This is a company that provides 3D printing as a service. Under a little bit of pressure again, looking to make it 3 straight down days ahead of earnings, down 3.5% today to 30.50. This is a small company with a market cap of just over 400 million, but it is fairly liquid with an average daily volume of 880,000 shares. Look for a profit of 8 cents a share from X1, with sales up 356% to 12.7 million. So expecting very, very strong top-line growth. We'll see what the company has to say after the close. And also, specialty retailer Five Below. Big sellers in the stock yesterday. Stock is down another 1.2% today to 39.40, trying to hold on to its 50-day moving average here. A little bit concerned to see the big sellers in the stock yesterday ahead of earnings. This is a fast-growing company, a well-run company that I believe is still well-positioned for growth, but again, a tricky market. Hard to say how the market is going to respond to earnings. They are expected to produce strong bottom line and top line growth. Look for earnings of 38 cents a share from Five Below. That would be up 65% from a year ago. Sales up 35% to 170.2 million. Company caters to the preteen, teen crowd. Every product in their store is priced $5 and below. So interesting concept. Company's still in the early stages of expansion. We'll see what they have to say after the close. All right, other tech names really showing resilience out here. NetSuite, this is a company that is a provider of cloud-based enterprise resource planning software, ERP software. Stock that's very, very extended in price. It is up another 2.4% today to $79.66, but after 6 straight weekly price gains and another weekly gain taking shape this week, this is one that you don't want to chase. Okay, so plenty of stocks out there acting well, not showing anything in the way of sell signals, but NetSuite just one example of many extended stocks out there that you would be you don't want to touch. Don't want to touch it with a 10-foot pole up here. Has run up a lot. Fundamentals strong, but again, don't want to chase. Mentioned LinkedIn as being an outstanding performer. Let's not forget about Biogen IDEC, BIIB. We've been talking about this one this week. Look at this, up $5.85 today. Last I checked, it was up about $1 or $2. 3.3% gain for Biogen, trading at $182.93. What's the issue here? Another stock that is extended after a breakout in January over 155. And story here, we're going to hear from the FDA, I think, tomorrow regarding its oral multiple sclerosis treatment, a pill called BG12. Very favorable clinical data with this drug, and it is widely expected that this drug is going to be approved by the FDA. We will know for sure tomorrow, but obviously a lot of optimism when a stock breaks out over 155 and runs up to 182. There is optimism about something, and it's probably a result of expected approval of BG12. Interesting day for shares of Netflix. This one is on breakout watch, but nice day for the stock yesterday. Looked like it was ready to take out that 195 swing point. It hit a high of 197.06 today, and right now it is trading at 190.54, down 7 cents on the day. So kind of disappointing price action for Netflix today. Technically still looks fine, holding above its 50-day moving average. Really do believe this one has the potential to be a big leader going forward. Netflix is just one of the great turnaround stories in the market. A lot of people we're talking about the costs this company was dealing with to acquire new content. They have that great new series that they paid a lot of money for, whose name is escaping me right now. House of Cards. House of Cards is a great original programming show for Netflix, and they spent a lot for it, but it has been a monster hit for Netflix. And annual earnings growth this year and next supposed to be off the charts. Streaming is where it's at now. People aren't getting those DVDs mailed to them as much as they are just subscribing to streaming services provided by Netflix. So I still think this one can work, but if the market is getting ready to pull back here, wouldn't be surprised to see Netflix pay a visit to its 50-day moving average right now, right around 171 a share. But Netflix still acting well. Again, Pacific Crest yesterday raised its price target to $225. SourceFire, we mentioned yesterday. Nice technical setup taking place here. The stock is down 1.1% today to $56.95. But let's take a look at that weekly chart for SourceFire, and we'll see a nice little technical setup. In fact, what you have here is what could be a little handle area forming here, and when a handle area forms, drifts lower in light volume. You can see all the accumulation in SourceFire. If you're watching in Tiger TV, you can see 5 up weeks in a row, good strong volume behind that move, and now it is drifting lower in very light volume. So this could be paving the way for a breakout try over 60. Definitely one for your watch list, one to keep an eye on. Annual earnings growth at SourceFire expected to be pretty strong in 2013 and 2014. I think earnings growth of 22% expected this year and next. This is a network security firm, and decent industry group to be in right now. Life Technologies, a name we don't talk about too much. This is a lot of takeover chatter around Life Technologies, but it is a good base forming here, a good technical setup. Again, private equity firms could be coming in here, making a bid soon. The Wall Street Journal reported earlier this month that KKR was considering partnering up with some other private equity firms to make a bid. Also, medical equipment maker Danaher, Thermo Fisher Scientific might also be considering bids for Life Technologies. But you do have a good base setting up here, one to keep an eye on for a possible breakout over that 65, 66 price level. Stock right now trading at 64.13, up 9 cents on the day. And Sirona Dental, SIRO, nice base taking shape here as well. Watching this one for a breakout over 73, 74 in that area. You've got a nice, what could be described as a double bottom chart pattern. Here's your swing point right here. Again, watch for a breakout over 74. Sirona Dental Systems, ticker SIRO. Up big yesterday, extending gains today, up 23 cents to 72.81. And fundamentals at Sirona, not too bad. In their fourth quarter, their revenues were up 6% to $272.4 million. Earnings up 8%. Again, single-digit earnings and sales growth. Don't get too excited about that. Typically, I like to see earnings and sales growth of at least 25, 30%, if not more, for several quarters in a row. So fundamentals, not great at Sirona Dental, but consistent grower, well-run company, innovative product as well. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just 1 position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Well, all in all, not too bad a day for the market here. The Dow only down about 38 points to 14,522. NASDAQ Composite holding on to a slight gain, up 3 points to 3256, and the S&P 500 down just a little more than 1 point to 1562. If things stay the way they are here, 5 minutes left to go in Wednesday's session, looks like we're going to be able to avoid a higher volume decline for the major averages. That's good news. We've had 4 in the S&P 500, 4 in the NASDAQ Composite as well. That is reason enough to kind of play defensively here. Don't be in a rush to put new money to work in a market where they're starting to see signs of mild institutional selling. I want us to take a look at the NYSE Composite Index here. It's probably the most broad-based stock index out there. It is only down 0.2% today to 9,069. You can see trading near its session high after early weakness, and you had a nice bounce off the 50-day moving average for the NYSE Composite in February, and it is still holding above that line. So NYSE Composite being one of the more broad-based indices out there, showing very constructive price action today. After the close, I wanted to take a look at a couple of earnings report. Let's check in on shares of Red Hat, open source software, the Linux operating system. Red Hat in rally mode a little bit, up 1.2% to 49.82. This is a stock that has been under a lot of selling pressure. In fact, seeing quite a bit of institutional selling in Red Hat since late January, early February this year, perhaps in concerns about slowing growth ahead. We'll have to see, but significant resistance for Red Hat in that 50, 53, 54 area. So it's trading at 49.82. We'll see what the company has to say after the close. Look for a profit of 30 cents a share, up 3% from a year ago. Sales up 18% to $349.6 million. Also going to hear from adhesives firm H.B. Fuller, ticker FUL. Should see strong numbers here. The stock looks poised to extend its losing streak to 5 sessions. Has been a big winner in the market. Nice little breakout over 32 back in November. It's now trading at 39.34, down 1.7% on the day, and it has taken out its 50-day moving average. So a little bit of anxiety for H.B. Fuller shareholders ahead of earnings. Look for profit of 50 cents a share, up 14% from a year ago. Sales up 26%, pretty good top-line growth there, to $472.9 million. And finally, Texas Industries, TXI. Company makes heavy construction materials, cement, sand, gravel, crushed limestone, things like that. Holding near highs here, up down 74 cents on the day, I should say, to 66.01, but trading near its session high. So another stock out there showing relative price strength, being very stubborn about giving back gains. And then tomorrow, before the open, we're going to hear from Finish Line, FINL. Finish Line set to report tomorrow before the open. Has been a laggard performer in the retail sector. And then Mosaic. I know a lot of people still like these fertilizer stocks, but boy, have they been under a lot of selling pressure. Shares of Mosaic down 11 cents today to 58.62. Took out its 50-day moving average last week. Still holding above the 200-day line, but another stock under selling pressure. Also, tomorrow before the open, we'll hear from Winnebago Industries. So still some earnings reports out there. First quarter going to come to an end tomorrow, and we'll have earnings reports starting up in mid to late April. Have a great day, everyone. Coming up next, the Tom O'Brien Show. See you back here tomorrow. Final show of Breakout Investing. Take care.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.